The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Hey everybody, good morning. Welcome back to another spooky season live stream. We're getting pretty close to Halloween. We've got 11 days away till we get Halloween. I don't know if anybody celebrates. I love Halloween as a holiday. It's always a good time. Hang out with some friends, eat some candy. What's wrong with that? Anyways, hope everyone had a nice weekend. We are back in the saddle here for another live stream. Hope everybody is doing okay. I just want to make sure if anybody cannot hear me or if anything sounds off or looks weird about the stream, please let me know. We'll try and get it sorted out here before we get too far into things. Let me know as we get started. Also, if you could, where are you tuning in from? What part of the world are you watching from? The US, from Europe, from Africa, Asia? Just let me know what part or what country you're from. Always good to see just the diverse list of different places people watch the stream from. Anyways, stock market is back up here, following through a little bit here from the Friday reversal. I mean, this was a wild candle on Friday. If you're looking at the NASDAQ, you had a choppy week last week that ultimately kind of resolved to the upside, closing at the upper end of the weekly candle. We talked about that in the Sunday video when we were doing monthly chart analysis. Price action remains in a strong bull trend until proven otherwise. The weekly chart also looked strong last week with a solid rebound from this red candle. I mean, this red candle looked like, okay, if the sellers are going to take it, that's usually the type of candle that they're going to start the move on, right? And we've got people from all over the place. Look at this. Australia, Central England, Hawaii, Brazil, Cincinnati, UK, Nigeria, California, just all over the place. Good to see everybody here. Thanks for being here. Okay, so what I was saying about the NASDAQ, right? NASDAQ's candle 2 weeks ago looked like it was going to be the start of something bigger, and it was not at all. In fact, it adequately tricked a lot of people. Now, the reason that the market got so fearful all of a sudden was obviously because of the renewed tariff uncertainties put on by the president, who put out posts and tweets and all that about, how China's not, they're being stubborn. They're not working with us, essentially. I don't see a reason to meet with President Xi. And then all of that reversed. Regardless if we're just looking at price action, price pulled back, found buyers. We gapped up last week. And interestingly, in last week's price action, when looking at the NASDAQ, we actually had an intra-week higher low, which ultimately closed at a fresh all-time weekly high last week. This morning, as the market opens up again, we are seeing this week's candle start off on the right foot. Path of least resistance. I'll tell you, this is my opinion on it. My opinion is that the NASDAQ and S&P 500 have a very distinct possibility this week. I would give it a good probability that we're going to see fresh all-time highs. This week, we have a couple key events. The two biggest events that I see on the radar are Friday's CPI report, which we are definitely getting regardless of the government shutdown. So we know that's coming. And we also know Tesla earnings are coming on Wednesday. And the reason that that matters is because Tesla is one of the first of the big ones, the Magnificent Seven, right? The big stocks in the US market to report their earnings for the prior quarter. And so as we get Q3 earnings, we're going to start paying attention to Tesla, Amazon, Google, Microsoft, like all these big names. We want to see good numbers there to continue to bolster the stock market higher. I've made the, I have the opinion that I think US stocks are going to continue to deliver strong earnings, given that we have a pretty hospitable macro environment right now. And I know that can sound controversial, but I'll explain why. When I say the economy is strong, I know that it's sometimes sounds like gaslighting to people who are not doing great. I say that with love and care, because to be honest, the economy is not just about the ultimate, you know, when I'm talking about the economy, I'm talking about the overall output of the economy, which is very K-shaped in nature. We've talked about this a lot. The bottom end of the consumer is hurting, whereas the high end of the consumer is doing very, very well. Why? Stock markets are up, asset prices are up, interest rates being up disproportionately helps people who have interest to collect. Essentially, lenders make more money than borrowers in a high interest rate environment, right? And so you have a situation in which the economy is not great for everybody per se, but it is overall very strong. We have 3.8% GDP growth as a output of our economy that is very strong. And so we have an economy that's holding up decently well. What's not been so great is the jobs number, but we are jobs numbers, but we are still in the dark with the latest data points. So we don't really know what's happening here, but we do know that as of the latest data that we do have, growth metrics still look decently strong for the US. And so I think that that continues to bolster strong corporate earnings. And so I bought the dip on the NASDAQ 2 weeks ago. I'm still in that same trade. I have since trailed my stop loss or trimmed my stop loss to below last week's intra-week low. If we were to have a sharp reversal lower here this week and take out those prior lows, I will take a loss on that. And if we can take a move or make a move through those highs, which I think personally is the more likely scenario, I think we are likely to see fresh highs in the NASDAQ this week. And if we do see that, that will be an opportunity for me to look for higher lows of any sort to start taking this stop loss and moving it into profit. So that's the game plan for me with NASDAQ this week. We've got a nice start. We are in the green to start out the week. We'll see if those gains can hold. S&P 500 also looks really strong as well. S&P 500 up 0.36 here percent this morning. And the Russell looking pretty strong as well, up 1%. Dow Jones up 0.27%. And if we take a look at the VIX is continuing its sort of push lower from the Friday contraction we had in volatility. Hey, Blunt, good to see you, my friend. I saw Dane Trade's video. I commented on that. Yeah, I saw it too. Why does my FX book stop at 2023? Yeah, so I put out a video at the time when that took place. And if he had pulled up the MyFX book and looked at the notes on it, by the way, I thought his video was great. I mean, it was very, very fair. You know, I don't have, when it comes to resources as a US trader, I can't trade CFDs, which is what I was doing to track my performance on my FX book. But I made a video as soon as I lost the account because I knew it would look like, oh, your account got disconnected. But it got disconnected because the brokerage that I was using to mirror a lot of my index trades, my gold trades, which I can't do on a US brokerage, they lost their access to MetaTrader. So the account was, you know, kind of out of luck. But yeah. But yeah, no, Blunt, I thought the video was pretty good, to be honest. Like it's fair. I think it's an important thing when it comes to trading influencers, especially people who sell things. Like, verify, don't just trust. I'm a big advocate for that. I talk frequently about my own trading performance. I don't claim to be making, you know, 50% per month or millions of dollars in the market every month. But I am a big advocate for realistic, slow and steady trading. And I always will be. Like, that's just the only way I know how to trade profitably is slowly. How are you feeling about NASDAQ sentiment? Yeah, let's look at that. I'm curious. So I actually feel more interested in bullish setups due to what we see here in the investor sentiment survey. If we look at the bearish rating that the crowd sentiment has kind of tilted towards, that gives me more interest in staying long the NASDAQ, because we've seen, when people get really more fearful, more bearish, what that does to the market is it gives the market more room to climb that sentiment. It's a contrarian indicator for a reason. Like, when you have everybody, like, here's for example, when we saw back in April, the market completely crater down 20 something percent for the NASDAQ, sentiment, like bearish sentiment, went through the roof. We had like 45, I think we had a 50% bearish. No, we had more than that. I think it was 60%. I guess I can try and pull up the data. Can I go back that far? Let's see. Can I go back? Yes, I can. Of course I can. This is awesome. Okay. So we peaked out. Okay, look at this, guys. So on the week that the market bottomed, right? Red stands for bearish sentiment. Blue is bullish sentiment. Gray is neutral. Okay. So check this out. On the week that the market bottomed, bearish sentiment hit a peak of about 62% of respondents marked feeling bearish about the stock market at the lows of the stock market. You see what I'm saying? Bearish sentiment, when bears are really loud, historically speaking, not every time and not with certainty, but generally speaking, high amounts of bearishness are bottoming signals in the stock market on a bigger term picture, not like to the day, not to the week, because you can see bears stayed bearish for weeks on end during this period of time. And bullishness was very, very low in the stock market during the April sell-off. Like, people were not bullish on the market. We took that on this channel. If you go back and watch the videos during that time, we were contrarian bulls in that environment looking for breakouts. And once we started getting them, that market just climbed that wall of worry. And so I think you're still seeing an environment in which bears outweigh bulls. There's still a lot of pessimism in this market, which tells me you may have room for the US stock market to keep moving higher despite the wall of bearish content that you see out there in the social media world. I mean, it is bear city out there. There's a lot of people who are thinking, the US stock market's gotta fall down, it's gotta have a bigger sell-off. And look, if you tell me we've got a 5-10% pullback in the NASDAQ and S&P 500, I'm excited for that, because that gives me a chance to buy the dip on stuff that I like. But the thing that we have to be careful about is when everybody is bearish, the market has a wonderful ability to, as I always say on the channel, play gotcha. The market loves to play gotcha. So if everybody's bearish, thinking this thing's going to roll over and go south, the market could just fly through the highs just to run the stops on a lot of people who are bearish. You see what I'm saying? That is what I see as the path of least resistance if we're looking at sentiment. And we can also look at the put to call ratio. And this is very interesting. On Friday, look at this. We had high amounts of bearish sentiment on Friday in the options market as people flooded yet again into buying puts. So sentiment-wise, I am very bullish. If you want to ask about sentiment, like based on what crowd sentiment is like, bull city, because crowd sentiment is bearish. Does that make sense? The Edge Finder is a tool that really getting to the core point of the software, it's a market scanner that scans sentiment. I call it sentiment analysis, and macro, we call it fundamental analysis. It also does do some technicals with seasonality and momentum. What the Edgefinder specializes in is watching all three of these things and generating ideas for us, so that by the time Monday morning rolls around and you're looking for setups, you can already find this stuff generated in the AI market scanner or in the top setups algorithm. All of this stuff is being fed and thought through by our software. That's the utility of the Edgefinder. So when I go look at my top setups page, we should see for the S&P 500 and for the NASDAQ, we should see sentiment indicators suggesting bullishness for those charts. And you can see when we look at the top setup simple view, sentiment favors NASDAQ bullishness. You see what I'm saying? So the beauty of this is that having software, we also want to look at the economic data, right? But that could take us another 15, 20 minutes of presenting. The beauty of the Edgefinder, it's automatically doing it. So, when I'm just trading by myself, if I'm not streaming, like I always make the point that when I was in Greece for my sister's wedding some time ago, I wasn't streaming, I wasn't making content, and which is rare for me. I'm always making content or streaming. But during that time, all I was doing was pulling up what you see on your screen right now and just, hey, sentiment, technicals, economic data, pulling up charts, finding a setup, entering if there was a trade, doing nothing if not, and managing trades that I was in. Like, that's the utility of the Edgefinder. It's an automation system that scans a bunch of market data. Put to call indicators for retail. Yeah, so it's just looking at overall market options flow. And so it gives us a really holistic view of just how crowd sentiment is looking. And what we tend to see is that when they get extreme one direction or the other, it can be a really good indicator. So crowd sentiment is still bearish. I think we have room to keep pushing. Edgefinder is good for eliminating noise. I would agree. Like the Edgefinder, what's nice about this, no part of this, and some people call this a con of the Edgefinder. I'll tell you that it's a pro. Some people don't like that the Edgefinder is not tracking tweets from Donald Trump or Jerome Powell statements. I would actually argue that I like the way the Edgefinder, well, if I didn't like it this way, then I would have built it differently. But the Edgefinder is not looking at that stuff intentionally. We look at hard data coming in. We don't look at news headlines, which are highly biased, highly emotional, and can get you to make rash decisions really quickly. The Edgefinder looks at COT data, what institutions bought and sold. It looks at the options flow, what people bought and sold. It looks at technical readings like historical seasonality, cut through all the headlines and articles and noise and the scary news cycle. Get that off my screen. I don't need that. I need the data. That's what the Edgefinder does. And why I'm such an adamant, proponent of the way it does things. There's a lot of screeners that will scan a whole bunch of news headlines and they will screen, posts from Donald Trump. But there's an expression I heard another YouTuber say, FX Evolution, if you guys know him, he's a great content creator. I really like his videos. He said, and I love this expression. I'm not going to write it all out. I'll just tell you what he said. He said, if it's in the press, it's in the price. And I think that's so true. By the time you hear something from, something happening in the Middle East or something between Putin and Trump or something like that, by the time you hear it, by the time the press is telling you about it, it's already in the price. Like people are already trading. You're very late to the party by the time you hear about that news. So instead of focusing on that stuff, let's just look at market sentiment indicators. Let's look at the economy. Let's look at the technicals, right? If it's in the press, it's in the price. Great expression from FX Evolution on YouTube. Shout out to him. That's awesome. Very true. So instead of looking at the press and news articles, right, ignore that stuff. Let's focus on put to call. Let's focus on seasonality. What's our trajectory for the rest of this year? If you don't have this stuff in front of you and you're just staring at news headlines, like, I'm not even gonna lie, I think you are shooting yourself in the foot. If you're looking at articles and headlines instead of data, you're more likely to confuse yourself than to actually benefit from it. That's my opinion. I know there's some traders who have different thoughts on that. Some people really love to read the daily news and the articles and get a bias from it. And like, if that's your thing, do it. But I prefer not to read articles to build a bias, but rather to just look at the data, right? Because you can psych yourself out. The news headlines, look, I'm in the world of, I mean, trust me, people comment all the time, like my headlines and titles and thumbnails, they get mad at me because they're really scary and clickable. Like, look, I have to play the game too. Media is really good at getting you to click. It's really good to get your attention. Like, I do it too. I'm not innocent in that. It's what we all have to do in the content game to get people to read or watch or do our content. But if you watch my videos, I might have a crazy, Jerome Powell pointing at something, freaking out. But when you actually watch the video, it's all about data. We look at seasonality. The S&P 500, if you want to go purely off historical price patterns, should rise into the end of the year based on the last 10 years. Is that a guarantee? Nope. But it's data. Like, you can't argue with the seasonal data. This is just pure statistics. In the last 10 years, we historically see a strong November for the stock market. Every year? No. Is that a guarantee, Nick? Absolutely not. Nothing is. All we can do as traders, all we can do as investors is make probability-based guesses. We never know. At any point, some post, some tweet, some geopolitical thing could happen in another part of the world that drastically impacts the price action. No one can predict that. But what we can do is we can at least look at the data and try and build a plan around it and risk small in case we're wrong. Like, let's say that I think the stock market, I personally do think there is upside for the market, especially considering that most people are bearish right now. Again, we see that data too. Put to call ratio, I just said, people buying puts like crazy. We also have the investor sentiment survey showing people are bearish in the survey. That tells me there's upside for the stock market in the short term. It also tells me that when I look at that seasonality chart and I say stock market has room to move higher in November, historically speaking, that's not my opinion. That's not my gut feeling. That's not my inner want for what the market, it doesn't matter. It's the data is telling me that. So we build plans on this channel, not about gut feelings or whether we like Trump or not. Like, that is nonsense. Build it around data, right? Because like, some people are out there and they're like, they love Trump, and so everything he says, they're like, they believe him. And then other people are making equal mistakes where everything he says they completely reject and they trade against it. And like, that is going to take you down a really dark path, as it has for many traders this year. Instead, filter out the noise, let politicians do their thing, and in the meantime, let's just trade the data. Don't trade on hunches. That's correct. It's a dangerous, dangerous game. Anyways, let's move on to something else. Let's take a look at the dollar here. Dollar index pulled back last week. By the way, before I move on from that, if you are ready to take your next step and start trading with some data, my team and I, we've been building the Edge Finder since 2022. Really, it started in 2021, 2020, where we started brainstorming the idea, but product has come live since 2022. We've been improving it every single month, every day, every week. If you want to copy the Edge Finder, you want to try it out, let's drop a link here in the chat if we could, James, if you don't mind for me, to where you can sign up for a trial. If you want to get access to the free version of the Edge Finder on our website or a 30-day trial to the full version, simply fill out this form that's been dropped in the chat here. Take advantage. You can also see the QR code. Just scan that QR code. If you're watching on a TV or a computer, it takes you 2 seconds. Just pull your camera out, scan it. It will take you to that form. Take 2 seconds and look at it there. So the dollar index, pulling back here last week, seems like it's trying to find support. I still think also the dollar index may have a little bit of room to push up to this 100 level. So if we take a look at the dollar index from let's look at the currencies for a quick second. Economic surprise meter, see what's up in currency land. Which ones are outperforming expectations versus underperforming expectations? That is what the economic surprise meter, it's in the name. Which ones are surprisingly good or surprisingly weak? Not the price action, but the economic data. US and Japan are holding up as the ones outperforming the most. Some of the weakest economic data points relative to expectations are the Swiss franc, the euro, and the British pound. So these ones are getting soft readings. That means like if people are expecting GDP to be one thing, it's disappointing. If people are expecting other growth metrics to be here, they're coming in low. That's what this chart is showing you. It's scanning all the major currencies and telling you which ones are, kind of looking strong, look like they just left the gym, or other people who look like they've skipped leg day for a couple years, right? So that's kind of what this chart is showing me. So I still think the dollar has upside relative to peers. That should also be reflective for the most part in our top setups reading. You can see you have the USD CAD. You have that's our top dollar setup right now. If I pull up the USD CAD, yeah, so I like the dollar CAD for a pullback. If we can get one, come down into this area here, 38.2, that's the 1.3950 level. Could be interesting to see if we can get that move, but a little bit of a ways away. So no new dollar setups for me at that time. I'm saving up, Nick, looking for an edge. Thanks for what you do, man. Thanks for being here. Appreciate that. Hi, Nick. I've been using the Edge Finder for more than a year now. I'm up 11% year to date in my portfolio. It's not much, but I'm happy about it. Thank you to you and your team. Hey, you know what? If you're making 11% year to date, do you know how much better you're doing than the average trader out there? Thousands of percent better. You know why? Most traders lose money. If you're making anything over time consistently in the markets, anything, if you made 1% in a year of trading, nobody likes to hear this because it's not fashionable or fun to hear. If you made 1% in a year's worth of trading, you vastly outperformed most traders who lose probably 50% per year on average, right? I know I don't have any stats on this in front of me, so I'm just speaking off the top of my head, but most people lose money in trading. If you make anything in trading, even if it's small, you're doing great. Keep it up. Bloomberg says the yuan has outperformed the dollar this year so far by 30%. What do you think about the yuan, Nick? USD C and H. Yeah, I don't really have a thought on it, to be honest. We do have a Chinese, we do have this. We should use this more often. Oh, sorry. That's Switzerland. Let's look at China. Interesting. So most Forex brokerages, go figure, they're very thinly traded, the Chinese yuan. And I don't even know if I can trade the Chinese yuan. I don't trade it very often, but I don't even know if I can trade the Chinese yuan on my brokerage. Can you guys let me know? Can you trade on the brokerage that you use? Can you trade USD for my Forex traders out there? And I know not everybody's a Forex trader, but for those who are, can you trade USD CNH on your brokerage that you trade with? Honestly, Edge Finder and Stockbox are pretty good, and I've been watching your videos on both channels, and I've really improved my knowledge for stocks and trading in general. Thanks, Nick. Roberto, thank you very much, my friend. I appreciate the kind words. You know, if I've helped you in any way in your trading journey, then that's just awesome. You know, I'm just sharing my own things I've learned over the years through, all this stuff that I've done over the years in markets. So if I could share something and it helps you out, then very cool. Works on Oanda. Okay. I use the Edge Finder also to trade it. Nice. Okay, so the Chinese yuan actually looks really strong here. I don't know why I don't look at this more often. My dad is a system builder too, and he's watching the stream right now. And we have the same problem. Whereas, look, Edge Finder's awesome. He builds stuff too. you can build all this cool stuff. The problem is there's too much of it to look at once. So I don't know why I haven't been looking at this. Like literally, this is awesome. We have Chinese economic data, which is like the second biggest economy in the world. So anyways, Chinese GDP growth, 0.3% surprise to the upside, 1.1% compared to the forecast, 0.8% forecast. So, that's strong for both Chinese stocks and for the Chinese economy. I mean, this is probably why, I have seen the Chinese stock market getting bullish ratings within the Edge Finder. I just haven't looked at the data very closely because it's been a bit overbought. Like Chinese stocks have been really hot here recently. Manufacturing PMIs slightly better than expected. Services PMIs looks pretty strong. But remember, for Chinese stuff, you want to look at manufacturing PMIs. The Chinese are the manufacturing kings, right? Kings and queens. They took our spot, by the way. Can we get that back? That's what I guess Trump is trying to do. But I don't know. It's tough because I personally think the U.S. is maybe not meant to be a manufacturing hub anymore. I think our economy is at that mature rate. Anyways, maybe China's next to forfeit manufacturing to another part of the world. I have a crazy concept. I think it might go to India, and maybe someday, this is my, check back in 50 years. And if I'm wrong, don't tell me. But if I'm right, give me some praise. I think manufacturing could someday move to Africa because they have a lot of materials there and workforces of people. There's, population growth is huge in Africa. So manufacturing over history has moved from place to place. One point it was, the UK, and it's moved to the US, and it's moved to China, and it's moved to, like, over time that tends to move. So my crazy prediction that I have nothing to back it off other than population growth and history would be maybe manufacturing someday moves to Africa. Anyways, CPI in China is actually in the negative. So they're experiencing deflation there. Unemployment rate, 5.2%, not terrible. Came in better than expected October 20. Did we have unemployment rate come in today for China? Again, we don't look at this stuff. We really should. Chinese yuan's been really strong here recently. Dollar was really strong for some time and has now started to pull back. U.S. stock market just opened up. We've got NASDAQ pushing here. Again, not too far off from all-time highs. Believe it or not, playing gotcha. That is what the market is doing right now, guys. We are playing gotcha to the max. Everybody bought puts on Friday. Everybody, AAII investor sentiment survey got the most bearish it's been in months last week. And what did the market do? Ups a daisy. It's really a crazy game that the market will play like that. Convince everyone to go bearish just in time for the VIX to completely evaporate, stocks to rise. And look at gold. Gold's almost back to the highs again. Man, congrats to the gold bulls. If you guys don't have access to the Edge Finder, we're going to throw over the show here in just a second to my friend Ivan FX. He's going to take over for a little bit. Before I go, if you guys want to check out the Edge Finder, we mentioned it earlier, but you can get a 30-day trial or at least information about our free demo version on our website by scanning the QR code that is below my camera here or clicking the link that's been dropped in the live stream chat. Simply fill out that form. It takes like 30 seconds, and we'll send you an email with access to the Edge Finder for you to start using it. I encourage you. If you really like my content and you have not tried the Edge Finder before, I'm going to give you a little secret. November, we do a big special event. If you've thought about getting the Edge Finder, there is no better time than 11 days from now. Okay. With that said, you should try it before then to see if it's right for you before you make the decision to purchase it. Try it. Highly recommend it. Personal recommendation. I have a lot of affiliation. I built the tool, so I'm not going to say that. But look, I'm a little biased. I'm part of the team that built it, but you should try it and see if it's right for you. I highly encourage it. Okay, guys, up next, we've got Ivan FX taking over the stream. Stay tuned for another great session with our next host, Ivan FX. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
As the yen man coming into town, we had a meeting yesterday. Everyone wasn't there, but we had a good meeting yesterday, and I said yen pairs to go higher this week. I said dollar to go higher this week, only temporarily, before we can get a better sell at about 99. So my overall directional move on dollar is lower, but I want much better risk reward ratio. And I also share that it is, of course, fat matter. It can drop from here, and that doesn't bother me. But what bothers me is as this level is generally a level that doesn't really do well over time. So to me, I'll just let it be. But okay. Now, for me going into this week, is the importance of being consistent with the ends. We saw yesterday that there was an agreement over in Japan that, at least yesterday, that they have agreed on a coalition, paves way for Prime Minister Takaishi. That would be great, because she is yen bearish. She loves what is this guy called? The former Prime Minister, what is the guy called? Abenogam, and he was into Abenogamics. I didn't speak. Oh, where they believe hard and strong in supplying the economy with tons of money to create employment. So that's about weakness for the Japanese yen. So Max says, "Hi man, I'll look at your text messages. I saw you sending me some charts and some trades. Anything you care to share right now? Well, let's still have you here." And Joshua says, "What about US dollar, Hong Kong dollar?" And that was actually shared in the meeting yesterday as a very interesting pair. And of course, at the moment, it's a bit high, but we know that the authorities are defending 7.75, though risk warning here. This is a very illiquid asset, but it generally just goes from 7.75 to 7.85. So up and down, up and down, up and down, and that's kind of where it's defended for a long time. So that's coming into a level is still way too high for me, because last time we were here back in May, that was one of those things we took together, but yeah, fun little thing that one. And would you look at it? Not necessarily generally, but if it comes back down to 7.75, I at least will get notified. You missed New Zealand CAD. We see, where are you? You're supposed to, of course, it's the wrong screen. Yeah, okay, you want to buy New Zealand CAD? Yeah. Maybe it's just the universe saying, "Hey, that was not a good that will hurt you later." Like it will only go to stop loss. So you wanted to buy, is that which one? You wanted to buy 80.8033. So that would make you look like 8033, something in this direction. Yeah, okay. It's a bit aggressive. I mean, I'll personally not care about that, but I know. Nah. I mean, it can still come back tomorrow. That's my positive. Like, it's gonna come back tomorrow. It always comes back tomorrow. So if I buy now, it comes back to your level tomorrow. Don't worry. So that's why I wouldn't. That's why I wouldn't enter the trade now, because if I enter a trade, I shock you and I kid you not, it's gonna go to stop loss. So yeah, just stay and wait. Of course, whatever I mentioned today is not financial advice whatsoever. Don't worry about that. I'm only going to talk about what I believe should happen based upon the drivers. And again, we had a meeting about an hour ago in Discord and mentioned meeting where we're talking about drivers of gold. I think that was pretty awesome. I liked it. And that not necessarily, but specifically can be given to other assets, not just gold in particularly, but that was in particular mentioned in a particularly fun place to be. So I said dollar strength, I said. And then I said, didn't say anything about Aussie. Aussie yen, Aussie dollar. Did you want to short? Yeah. What do you do, Max? I see you post your trades in my Discord. I see your trades. And then I do opposite of you. And then I posted in chat, like, say, hey, you know what I wanted to do? I wanted to sell dollar Swissy. Didn't that was a pretty good pretty good idea last week, where I'm like, that's looking like a great sell place. That looks like a great sell place, and you had bought somewhere here, somewhere in this direction, and you had put your stop loss down there. I'm like, bruv, coming for you. Don't fight me. I'm strong. I don't. Now, that was a really great idea, and for that matter, for this week, if I could get dollar Swiss back up again, that would be great. Up to 80.40 as a resistance level. And what I also warned about yesterday as an educational thing is this level here looks so promising. It has a pullback, it's a resistance. Look at this resistance over here. But I kid you not, by Wednesday, not forecasting anything, but by Wednesday, I don't think this would have held. And more than anything else, technically, this situation happens something in this direction. That break higher generally is very strong. What's the difference between this break higher, this resistance and this resistance is because we are already 169 pips lower. We have moved quite a bit. And then this is the first, this is the second, third, this is the fourth pullback. And for everyone who knows anything about me and pullbacks, when you are anything plus from 3 and higher is generally when you are having increased risk of hitting your stop loss, increased risk of deeper pullbacks, and not necessarily whipshaws, but yeah, like not really great. So dollar Swiss, to be honest with you, I would love to have sold it now, but no, it has to have a bigger pullback. Same thing for dollar, Australian dollar, US dollar. I really love for this one to break the resistance it created today, this morning, last week, and whatever. And this pullback here is a bit of a shallow one. And for that matter, what can happen now generally tends to happen is that we have like quite a strong breakthrough. But that's what I talk about a lot and say, patience. And I pull up my my PDF and say, hey, you know, when this breaks here, when we break here, we break the previous resistance. That's when you look for a pullback. And you should probably look for a pullback of about 30%, 38%, that back to the level, or even 61. So a buy zone, something like this, is kind of what you're looking for. Because you know what happens when you buy up there, what happens when you buy the breakout? That's when it comes to hunt your stop loss. So it's all about the patience, all about doing this a lot of times. Doesn't really matter for Aussie, for that matter, but doing this a lot of times, doing it again, do 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 it again. And then you're like, okay, I said between what did I say, 38 to 61. As this is just a fib retracement, just for visual purposes. I already know what level I want to do anyways. But yeah, coming back down to this one, because I have been trading up there. I'm like, oh, that looks like a new high pullback. Only for market, in some instances, all the way down, there is your buy, and then, or if that matter, down to this level, and then it goes, and then it will look, and then you would look at me, then you would look at my face, and I'll be red as that pumpkin above me. Can we have gold analysis? Can we do pound dollar? Can we do euro Aussie? We had a request yesterday for pound, for euro Aussie, and I practically said I believe it should go lower, and that's only because of the reaction to the heightened risk with US and China and their tariffs. Okay. I'm not going to take anything there, but I'm just saying, okay, I believe it's going to go lower, mostly because of how it has peaked, and right now you have a new lower low. That would be great, and then you generally think, okay, new lower low, pull back, and then continuation lower, and everything is great. The only problem here is where if this is not a great pullback, and when you're thinking of, okay, how do I even trade? What do I do? How does this look like? It's that whenever I look at a market, whenever I look at what I want to do, I always want to have the biggest pullback so that I can pay the least amount of money in costs. Because right now we are a good 200 pips to previous high. So there is that. But that's just a technical move. Remind yourself that Euro Aussie doesn't move the market. They are a byproduct by Aussie and Euro. So you will find range bounds and spikes and lack of a trend, and sometimes a trend, and sometimes it just goes like this times, and then it kind of falls flat face the next day. So it's really frustrating over time. But here and there, I can agree with it. But okay. And now pound, the British pound and the US dollar. Now, I said we need to break 3380. Have we broken 13380? Yes, we have. I am slightly, if that is the case, I am a bit skeptical about this trade for this week. Why is it so? Because at the same time as pound is strong, dollar is strong. And until this one makes a new lower low or some kind of rejections here, I would be very cautious for pound, because what pound tends to do is pound tends to be strong against the dollar, and then tank because dollar became stronger and won in the end. So that when you are kind of thinking, oh, this looks like a great reversal trade, yes, it does. But I can almost guarantee you, just for the fun of it, it is going to have a much steeper pullback than we currently see. And if it doesn't, then great. Then we save that. But right now, it is forcing itself lower. So any market like this would be great. Central pivot 133.80, M2 133.36. Yeah, that's it. And whatever you use to enter is kind of up to you. But right now, this is kind of what I see here, and then higher. The easy analysis here is gold is strong, dollar is strong, pound is strong. Dollar is strong because of, I just saw in the announcement that who was it? Was it press secretary? It wasn't press secretary. It was who? Bezit? That said that, think the shutdown is likely to end sometime by the end of this week. Maybe that's just a political thing to say. But if dollar weakened because we were having a shutdown, then the opposite should be realistic to say that dollar would be strong when there's a regain. The only question here that I don't know the answer to, other than it would be nice to know, is how many quit from the U.S. government in this period that is not returning to work, and number two, how many was fired. So they said that they put 800,000 out of a job, but how many is going to return? That's going to be the question. And again, if that's 100,000 less, that's going to have quite a significant dent into, well, it's a one-time move, but it's again for the next NFP, which would be for November, first Friday of November. Number is going to be very interesting if the government, by all means, reopens. Now, whenever it reopens, we're going to get a rolling feed of information of data that hasn't been posted yet, and in particularly the NFP from the beginning of the month that hasn't happened yet. And if that is a weak depressed number, then dollar is going to evidently fall. And if we then again get if we also then get an FOMC with this new data, that'd be great. But if we don't, if we get an FOMC without the government has reopened by then, I don't know if we maybe. That's a question to ask. I don't know. Maybe. I think we will. But also government. No, I think we will have an FOMC, even though the US government is down. But if we're not, we're just going to be walking around in darkness. You're holding a short GU at 133.50. Spicy. 133.50. Max, what's going on? Why are you going against everything I'm doing today? So that would be about there. I thought you were short term, not these deep losses. 133.50, is it? Something in this direction? That much? No. Is that your short? Yeah, because that didn't. Yeah, okay. Because you said I'm holding short GU at GU 133.5 or 133.50. You normally put those two together, but okay, I can see your continuation of that sentence was that's a target. I do apologize. 134 for. Okay, that I can agree to that one. That means that if you then get out before it goes up back up again, then we are. There's a dot. Yeah, I said there's a dot there somewhere. But when you're on your YouTube brain, you're just looking at as quick as you possibly can, so you both can still ramble about something else. But okay, I'm bullish on S&P 500. I gave someone the what do you call it in English? What do you call the thing that blow dryer? Just gave someone a really hard lesson about somebody I bought low somewhere around here, and it came back down, took the profit because of emotions, and then it went back up again. And I said, please learn. There was only 2 allowed reasons for you to exit your trade in my system and in my class, and how I do things and how we do things. Is to take profit and stop loss. Because why did you change? Why do you have emotions? Why do you add emotions to it? Why do you close in between? Then you're saying to yourself that you made a bad job before you're taking a trade. And if information came out later saying that, hey, there is a new part of information, you don't know that when you take a trade, or you have to take that into consideration. And then next time you have to take that into consideration, then you adapt, and you adapt. Because now I'm just going to be like, if I look at your history and I see you are exited, I can only see your emotions. I can only see your you not following your rules, not following your system. But then in a year's time, you're going to be like, I was emotional. What did you think? And if you were emotional, quote, emotions is any other reasons other than what you have stated in the before you take the trade. And if that was not present and you forget, then you can't track it and you can't improve, and you can't improve over time if it's just going to be every single time it's a different reason. Yeah, it wasn't you particularly, but my point here is, what is a driver of S&P 500? What is a driver of market? Okay, come on, let's not chicken out here, because at the end of the day, this is going to happen. This has to be a part of your alternatives to what could happen going forward. And it was a brilliant entry. I would argue it was great. But is that going to hinder you? And I said, when the fall happens, like, yeah, great, we're going to go higher from here, because the drivers of the market is still there. And the person said it was because of price action. I'm like, there is no price action allowed in that trade. That isn't a price action trade. That's a driver trade. And as long as you're within your risk management rules, as long as you're within what your intention was with the trade, not financial was whatsoever intended, but if the intention is still there, everything else is there, the market is still there, nothing has really changed changed any fundamentally, any sentimental or anything else, then stay strong. Be strong. You are strong. And if not, you can join me in some games and we can have some fun and we can play some internet games, and all of a sudden you forgot that you had to exit, and then it went into profit today anyways. I wouldn't say this is excuses. I would say this is a person that struggles with control, because if the trade presented here with an entry about 65.5 and a stop loss at 65.5, 65.2, 22, the person would never exit the trade if you were up in a mountain, a cabin somewhere, sitting in a jacuzzi, or hunting in the hunting in the forest, or doing other paintball things. Your trading account wouldn't exit it. That's the point. Then if the account did exit it, because of that, it was your reasons you put in before you took a trade, there's a whole other situation. But trading is difficult. Trading is hard, but more than anything else, it's all about training your emotions, and all about only putting yourself into situations where you are able to make money. That means a lot of times that, and for that matter, this person has been following me for some time, so I can say this to this person, but for this person is, or for whoever who is out there, I don't want you to lose money. Don't be here. But come back to me with a compulsive research of what you believe should happen, of what you are going to do when said market is happen. For example, when there is risk events, when there is change in monetary policy, when there is change in inflation trend, when there is all these different situations, or when the market just goes up and down all the time. When you have all these different markets, what are you going to do? Okay, I'm going to stay in, or I'm going to stay out. I'm going to wait. I'm going to do this. You have to always have a reaction, and an action, or a lack of action, lack of decision is also a decision. To just, okay, I'm just going to leave it alone. I'm not going to do anything. Okay, cool. That's also an action that also has consequences. All three actions has consequences. If you do something, if you don't do something, so if you do something, if you don't do something, or if you decide to just go research, all of them are something. All of them have something, has a consequence. The CS, is it called Go now? I started 20 years ago, back in the days, 1.6. So there is me. That's when you're on Discord, you can see I've been just playing something. It's just for me to 10 minutes, just having fun, just getting some stress out, because and some jokes out, because unless I'm just gonna fall out off my chair in misery and in tears. I believe yen pair should go higher. I'm just waiting for new higher high, waiting for new higher high, waiting for new higher high, waiting for new higher high. I was supposed to make a point out of Euro New Zealand. I want to short Euro New Zealand. I just wanted to have a bit of a more drawdown, come back, and I'll take it, and I'll post a trade in Discord. So until then, I love you. Don't. And by the way, I offer 1 hour free consultation if that's what you need. I'm here for you. And it's 10 out of 10. Everyone says they get great value out of it. So that's not me. That's them. Okay, cool, great. See you. Boom.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. Hope you had a great Monday, or for you guys in the US, hope you have a great start of a Monday. So let me open up the comment section as well. What has been happening in the markets over the weekend? Well, nothing much, if I'm being honest. So we opened without many gaps, as far as I can tell. Stocks are up. Gold is up as well on the day. Silver is up on the day. USD CAD, unfortunately, did not reach my buy limit level. Euro CAD is flat for the day. So this is the only trade I'm currently in, long Euro CAD, in a little bit of profit. I like this trade. I'm going to keep holding it. I think there is a nice sort of channel formation here. I think we're just going to continue respecting the trend lines, and we're going to continue grinding to the upside. So I'm long Euro CAD. US 30, Russell, everything is printing similar, let's see, price action. The DAX is stuck in a range, so the DAX seems very flat. I'm waiting for a breakout. I think this can remain flat for a really long time, and the DAX is not something that I'm really interested in right now. So we had quite an explosion at the sort of the beginning of 25, but now we're just stuck in this range. Nikkei is continuing to fly higher, so this is quite interesting for the Nikkei. I think it's kind of looking like the Nasdaq without the massive sell-off. We had a gap up on the 7th of October. I think that was the election. So when the new prime minister won, I think it's Takaishi or Koizumi, one of those. And new prime minister is actually dovish. So dovish is negative for the yen, but it's good for the stock market. It basically means cheaper loans. Platinum is, well, it's overall flying higher. Copper is still overall flat, I would say. Very, very tough thing to trade. So copper is very much impacted by geopolitics, and I don't have a massive edge in this sort of a chop fest. Bitcoin, let's check out crypto. The taco trade did not seem to work out on crypto. So focusing on Bitcoin, the taco trade would have been catching this dip, let's say. For any new viewers, taco means Trump always chickens out. Basically, Trump makes a crazy post, crazy tweet, crazy announcement, market tanks, you buy the dip, and then after a few days or after a few weeks, Trump goes back on his word, and essentially the price, the market goes back to the initial level. So that is the taco trade. Now, on the Nasdaq, it actually worked out well. So if you did catch the dip, we are now pretty much back at the level where the sell-off started. But on Bitcoin, you would have taken a loss. I think Nick took both taco trades. So he bought the dip on the Nasdaq. He bought the dip on Bitcoin. Bitcoin lost, but the Nasdaq turned out to be a nice winning trade. Why did this happen? Why such a dump on crypto? I'm not really sure. There was definitely some sort of, you could say, a long squeeze. So it's not a short squeeze because we're going down. So you can say a long squeeze, maybe. A lot of players got liquidated in this massive sell-off. I'm not sure why it was so aggressive. So it was just a massive meltdown from, let's say, the top to the bottom. It was like 18%. Yeah, that's pretty crazy. We are now recovering just a little bit. I don't have a lot of faith that this will continue higher. I think we're just going to chop around inside of the range. That is kind of my forecast. Ethereum doesn't look more interesting. The VIX is actually falling quite drastically. So it fell on Friday and now it's falling again on Monday. That's interesting to see. US oil keeps tanking lower, so cheaper gas prices, prices at the pump, which is always nice. As far as trading it, not the thing for me. I think it's very tough to read. I think it's, again, highly impacted by geopolitics. If you ask me what is the worst thing for me to trade, I would say copper and oil. I think that is very, very tough to trade, those two things. DXY, I'm bullish on the dollar. So I'm bullish on this thing. And I'm buying, essentially, I'm looking to buy USD CAD. I'm looking to buy maybe some other dollar pairs. This thing, I think, could go to, let's say, the 100 level. I think that is achievable. It's not a lot of room. So I think that could easily be achieved. JXY is, well, I would say bearish. I would say it kind of follows more of a downtrend than a flat price action. Bonds, what is happening with bonds? The yield is actually going lower. I don't know why exactly, but this seems to indicate a buying of US bonds. Again, TLT, price of bonds, is actually going up. So it should mean buying of US bonds while the yield goes lower, which is exactly what the US government wants to see. So they want to see lower bond yields so that their US debt is cheaper to repay. Okay. So cheaper debt to repay. That looks pretty healthy. I mean, if we can get back to, let's say, this level, 3.9, maybe even 3.8, we have been stuck in this range for a really long time now. So we have just been super flat after the rates have climbed massively. They've actually gone, very low in 2020. Anyway, Trump would like to see this chart go lower. That's kind of the only thing you need to know. So Trump wants to see this chart go lower. If this chart goes lower, Trump will be happy. Essentially, that makes it cheaper for the US to repay its debt. Okay, that's the general outlook of the markets. That's how we're starting this Monday. As far as the calendar goes, let me glance on the calendar. So last week, we didn't have much news. We had the Aussie news, which came in super bad. We had the pound news, which came in, I would say better than expected, because the last GDP number was negative and this one was positive. So if we jump onto the Edge Finder, let's see. GDP should be printed in here. For the UK, yep. So there's a print, and it's a positive one. Also, if you guys want to get the Edge Finder or join the A1 Discord, get trade signals, get trade analysis, market analysis, fundamental events analysis, you can do so by checking out the links in the description of the stream. And you can get a discount with my code, which is MARKO. So if you want to join, I will see you inside, and we can trade together. We can develop some trade ideas. It's not just me. It's Nick. It's Chris Pulver, Iwind, a lot of other successful traders. So yeah, very good stuff. You want to surround yourself with other successful traders, because that is the best way to reach profitability. The hardest thing you can do is go through trading alone. So trying to learn trading on your own, trying to go through the ups and downs on your own, that is very, very hard. Okay, I think trading is actually, people view trading as sort of a solo sport, because at the end of the day, you're the one clicking all the buttons. But I would say it's more of a team sport. And the most successful people in the game all have teams. So Medallion Fund, Jim Simmons, he had a massive team behind him. SMB Capital, all of those guys trade together, exchange ideas, and that's why they are so successful. A1 Trading, all of us trade together. Let's say we help each other. We develop trade ideas, which we share trade ideas, and that is what makes us stronger. So sort of, if you approach trading as a team sport, you're actually going to do much better than as a solo gig. This week, what do we have in terms of the Forex Factory calendar? Well, if you don't know, US government is still shut down, so they still have not reached a deal. The biggest one is going to be on Friday. So the CPI number, the CPI inflation is coming out on Friday. It is actually expected to come out a bit hotter than expected. Okay. Let me see. Okay, so the forecast is for the same number as the previous number, but by some of my research, I think it's the ISM indicator. I'm not sure of the exact name. I will find it. Basically, there's an indicator that forecasts CPI, and that indicator is actually going higher. So maybe that means higher CPI. Higher CPI, if we do print a hotter number, that will definitely have a positive reaction on the DXY. So the dollar will definitely gain value on a hot CPI print. Okay, let me tell you why. Most of the rate cuts are priced in, right? We have 2 rate cuts, 25 basis points already priced in. It is very tough for the Fed to get more dovish, okay? But it's pretty easy for them to get more hawkish. How can they get more hawkish? Well, if you get a hot NFP, if you get a hot CPI, if you get a high NFP, that could make the Fed reconsider their rate cuts. And it could mean repricing of the US dollar. US dollar should gain value on this news. That's why I'm actually looking for dollar bets to the upside before CPI. So if I don't get tagged into my position on USD CAD, I will consider maybe getting in just with a market order with some small initial risk. That's kind of the game plan. Other than the CPI, we have some other stuff. NZD came in a bit hotter than expected. So let me see NZD USD. USD. Well, not quite a big reaction on here. We are up on the day. Yeah, I mean, a hotter print should be bullish for the New Zealand dollar. As you can see, actual greater than the forecast is good for the currency. So CPI, Canada, GBP, CPI, and we have some manufacturing, and then we have our USD core CPI. Now, if you're wondering, how is the CPI still coming out while the US government is shut down? Well, the BLS, the Bureau of Labor Statistics, actually made an executive decision to assemble a small team who will assemble the CPI print, who will actually kind of compile the CPI print. So yeah, at least we will get the CPI. Now, let me check the comments. Hey Sluggy, what's up? Hey Max, how are you doing? Hey Joshua. Pound Aussie seems to be a good long because interest rate differentials hold for Bank of England and for cuts due to dramatically weak unemployment data for Aussie. Let's see GBP Aussie. I haven't checked out GBP Aussie. Yeah, I'm not sure. I don't wanna buy the pound, if I'm being honest. So I'm pretty bearish on the pound. Also, give me just 1 second to go grab a glass of water. I'll be back. Yeah, I'm not sure about the pound Aussie. I'm bearish on the pound. Aussie, I was bullish on the Aussie. We had some news lately that didn't come out very bullish. So if you go to the economic heat map, the unemployment came in pretty bad. Yeah, that was the last print. Unemployment. See? So forecast 4.3, actual number 4.5. the employment change was, well, actually, employment change was good. It's just the unemployment rate came in pretty bad. So on the Aussie, I was bullish. Now I'm kind of reconsidering. Let me see the overall stance. Swiss, what is the Swiss doing? Is the Swiss really so bad? Whoa. So like 0% of the data is coming out better than expected. That is pretty bad. Euro Swiss is actually falling, so that is interesting. Yeah, Euro Swiss is an interesting one to look at because it is considered that this level is kind of an intervention level where the Swiss bank will step in and maybe buy. So that could be a trading edge, actually. You could consider getting in on a buy setup like this and maybe aim for a 2-to-1, something like that. So yeah, that could be a nice trade. I don't think it's for me because I'm not really sure about the intervention from the Swiss bank, but from my research and from what I've heard, they will defend the 0.92 level. Okay, that is one of the policies that they have, is basically intervention and defending a specific level in the markets. Of course, they're not going to tell you what they're doing, but you can kind of suspect it because we had an attempt in August 24, in November 24, in April 25, and October 25. Okay. October 25, and we have rejected 3 times already, right? So maybe 4th time will happen again. It is just the probabilities. Okay. So that is the Euro Swiss. GP CAD. I'm not sure about the pound. I'm not that sure about the pound. I think the pound is not the greatest thing to buy, so I'm selling the CAD. I'm also possibly looking for pound short setups. If I want to buy, I would rather buy the dollar or the euro, if I'm being honest. So USD CAD, let's say euro against EJ, maybe euro yen, something with the euro CAD, of course, euro CAD. So I think that's a pretty strong position. I'm going to say that the current market in Forex is pretty tough to trade. Pretty low volatility. Movement is hard to find. So not the easiest market to trade. I went long USD CAD. So Joshua hates the CAD as well. Sluggy says, fully agree on team sport, Marco. Let's get rich together. So just trading in a team makes things a lot easier. People tell you some stuff that you would take a lot of time to learn on your own, right? So you can get insights, you can get a trading edge, you can get a trade idea, and you can save yourself a lot of time, and you can make even more percentage. So joining a trading community, joining a team can really transform your trading. I personally know if it wasn't for, let's say, a couple of communities that I was a part of when I was starting to trade, I probably would have quit trading altogether. Okay. At Schwartz Capital, we all center our analysis around order blocks and fair value gaps. Well, that seems to be a very successful concept. Please check out Aussie Yen. Aussie Yen. Aussie Yen, Aussie Yen. Okay, so for the Aussie Yen, I would say, well, it's definitely in an uptrend of sort. For the Aussie, again, I was bullish on. We got some recent data that wasn't really the best. So I'm now kind of reconsidering. Yen, I'm really uncertain of. So for the yen, I don't have a bias. The problem is the situation with the prime ministers. Prime minister is dovish, while the Bank of Japan is hawkish. That's a clash, okay? That's a clash. If they were both hawkish or if they were both dovish, I would have a better idea on the yen. But I first need to see what will happen with the Prime Minister and the Bank of Japan. So also from my research of the dollar yen, lately in the Asia session, if you closely monitor the Asia session, a couple of weeks ago, there was massive, let's say, selling of the yen in the Asia session, okay? Recently, it switched from massive selling to massive buying of the yen in the Asia session. Now, that can indicate that someone in Japan, big banks, investors, who knows, is switching from selling the yen to buying the yen. That makes things even more complicated because I was looking to buy the dollar yen, so I was betting on the yen weakness, right? Well, if the big players in the Asia session are buying the yen, that could mean this for the long term, okay? And I think that phenomenon has started maybe, let's say, on the 13th of October. And the price has been going lower, okay? I know it sounds a bit complicated right now because it's tough for me to explain without the actual research in front of me. But the conclusion is big players have been selling the yen consistently in the last few weeks. They have now switched from selling to actually buying the yen. Something has changed. Let's say some fundamental has changed, and yen may actually be gaining value. I still don't have a clear picture, so I'm still being pretty careful with dollar yen. I'm bullish on the dollar, but for the yen, I'm just not sure. For the Aussie yen, I don't have a clear bias. Okay, so I want to take this moment to mention the sponsor of today's video so that I don't forget. If you guys are looking to expand your trading capital, okay, if you're looking for a prop firm, it's a very tough research game, very tough to find a reliable prop firm. Well, we got one for you. It is DNA funded. This is my personal 50K challenge account, okay? Now, what is great, why we are recommending DNA, they're one of the few reliable prop firms, but with our discount code, you get a very, very competitive price. So if you use the code A1Live, just for you guys watching the streams, you get 25% off any of the challenges. So A1Live, 25% off any of the challenges. This is my account currently running a bit of, it's break even. It's break even, okay? This is the equity curve. For this account, I'm testing my ChatGPT trading challenge where I get daily trading signals from ChatGPT. And from, I would say, the 17th of September up until now, it has just been break-even trading. But in the last 4 months, it made like 22%. So we went from massive profits to now break-even trading. Currently have open 2 trades on the S&P and EJ. Both trades are in profit, so we will see what will happen. I'm pretty excited. I just don't know why it's trading around break-even right now. Maybe it has to do with the S&P slowing down a little bit, being a bit, let's say, inconsistent lately, especially with this massive taco trade. So I saw a request for GBP USD. I did have a trade on. It was a loss. This is the trade right here. I was betting on this thing to go lower. I was betting on selling it, okay? Now, I'm not sure anymore, okay? Well, I'm definitely not going to sell it here because I've already taken a loss. I just think we went back into the range. So as I mentioned, it's pretty tough to trade Forex right now. There's not a lot of movement. I would say the thing that is most likely to happen is this. I'm still fundamentally bullish on the dollar, bearish on the pound, but I don't want to get chopped around. The technical analysis is just not consistent with the fundamental analysis. So we're going to need to see a breakout lower for me to be bearish again and for me to start looking for sell setups. Max is bearish on the GBP Aussie. Let's see that chart. So GBP Aussie, well, I'm bearish on the pound. For the Aussie, not so sure, but this chart just looks flat, if I'm being honest. Depends on which time frame you're looking at. I'm personally looking at the daily time frame and it looks flat. Okay, gold. Sure. What do you think about UJ, EU? Okay, we're gonna do all of those. Euro Swiss. Okay, so gold. Sluggy, what do you like about Euro Swiss? Do you like buying the Euro Swiss? That's what my research is telling me. So the Swiss central bank, they're gonna defend this level. That could be a trade idea. I kind of like it, if I'm being honest. Yeah. So buying at this level, whoop. I mean, this level has been defended, as I mentioned, 3 times already. Maybe it will be defended again. You can pretty much expect if we do bounce, look at how aggressive the bounce is to the upside. See? So we could definitely hit a 2-to-1 like this. I think that could definitely happen. Interesting stuff. Let me put this one on the watch list. Let's keep monitoring the situation. Maybe I can place a small bet for the Euro Swiss. It could be nice. I mean, just their economic chart for the Swiss is so bad. You know, it should lose value. I'm not sure why the Euro Swiss is falling, but Swiss is just bearish. The euro is holding up okay. Oh shit! Sorry. So it's actually not holding up so well. What do we have? Gold. Gold. Just going higher. Another day, another upside on gold. I can't do anything here. Both gold and silver, they just look overextended. They just look like Bitcoin. It looks like a train that has exploded up. No sign of stopping. Every professional trader is telling you, don't buy right there. We're going to get a massive pullback. Every professional trader is also telling you, don't go short. This can go up for a lot longer. So the conclusion is, if you're not already in, better to be patient. The probabilities, the trading edge is not on your side if you're buying or selling right here. Now, I know Max likes to sell gold, but Max has done a lot of research. I'm guessing he has a pretty good trading edge to back up his statistics, to back up his back testing and live testing. For most people, it's not going to work out. Okay, for most people, you don't have a good enough trading edge to be selling gold in these conditions. So, pretty tough thing to trade. I know everyone wants to hear about it. It is in the news. Everyone is interested. How long will this train last? Everyone is buying as well. If you're a retail trader, there's a high chance you're buying this. I just think that's pretty dangerous. If you ask Nick, if you ask Chris Pulver, if you ask Iwind, if you ask James, I think they're all going to tell you the same thing. Dangerous game on gold and silver right now. Okay, it's a dangerous game. So, Euro Swiss, maybe wait for the wick first, or wait for the daily bottom. That could be smart. I'm not gonna lie. It could be smart to wait for a rejection first. So wait for that initial wick into it and then buy it, like we have had these examples. Because if you do buy right here, if you do buy right there, it will be pretty easy to get wicked out with a massive, huge wick like this, and then it goes up, right? So that's a good point, Max. That's the only pair I don't short. The Swiss Edgefinder is bad also in euro. Yeah, it is. Global Eco Surprise Meter. Yeah, I noticed it. So Sluggy FX has bought Euro Swiss 0.5% risk. Last week I long GP Swiss, didn't work. Okay, if it fits your plan, if you have found the clear trading edge in this particular trade, I think it's okay. then just go ahead and get in. Not financial advice, by the way. Don't sell gold here. Absolutely don't sell gold. I'm not shorting that one. Max definitely knows what's up. Yeah, so if you're a scalper, if you have a extremely good trading edge backed up by statistics, backed up by testing in different market conditions, then maybe it is for you. But 99.5% of the traders don't have such a trading edge. It's either going to break the top or roll over before very soon close to supply. I mean, with gold, I think once you get the pullback, it will be a big one. You know, it will be a big one, and you will be able to catch gold for a pretty good discount. All right. So I think this was a good pullback. So this was a pretty good one. This was a pretty good one. This was not so big. This was a good pullback. Let's go back to when it was. This was a good pullback. I think you're going to get something like this. Okay. So if you don't get in at these prices, you shouldn't be concerned, because once you get a pullback, gold is going to be cheap again relative to how it is right now. That is what I'm waiting for, essentially, because with massive moves up come massive moves down, you know. So the bigger the move up, the bigger the ride down, and then you can catch some levels. If you want me to show you some levels, well, I'll be taking stabs to buy gold all the way down. So maybe like 0.25, 0.25, 0.25, small positions, trying to catch the pullback. For me, that is a good game plan. Limited risk. One of them has high chance of actually working out. Okay. That's about it. I have ran out of time. We have covered most of the stuff. I will be here for the whole week, so you guys can catch me on the A1 schedule, live stream schedule. See, you can catch me here. Check out DNA Funded, 25% off with the code A1 Live. I'm looking to buy USD CAD. Euro Swiss looks juicy. I think there's a good trading edge in Euro Swiss, and that is the game plan. So good luck in the markets. Don't buy gold, don't sell gold, and you will do fine. See you.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.